Okay, let me make sure that we are streaming here. Doesn't look like YouTube streaming, but we'll get a recording up. So mic is all good. All right, it's one pass. So welcome back, everybody. Today is April 28th, 2025. My name is Spencer Riegle. I am the Chief Crypto Options Trader and Strategist at DARMA Capital Trading. We are DARMA Capital Trading. We do a weekly show with Bookmap to kind of go over the outlook of the week, talk about kind of what's been going on in the macro landscape and how we're kind of viewing markets, right? And so predominantly what we cover each week is Bitcoin and Ethereum markets. However, there is correlation broadly that we do touch on from time to time. So kind of went through who I am already, but if you'd like to reach out, feel free to find me on Twitter or X at _RIEGLE, or you can find me on LinkedIn. So just my name, Spencer Riegle, or Discord. Discord is a very good place to reach me as well, as I'm in there every day. So before we kind of get started, let's go through some disclaimers, and let me zoom in a bit. I can't format it. So just to know, all information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, digital currencies involves substantial risk of losses and is not suitable for all investors. Past performance is not necessarily indicative of future results, right? And so each week we kind of start out the session talking about risk capital, right? What is risk capital? Risk capital is capital that you are willing to lose and willing to put at risk, right? So we talk about risk reward and risk mitigation techniques, right? Each week. But there's always a priority or prioritization on risk management, right? At the end of the day, all traders exist because they have a seat at the table, and the moment you lose your seat at the table, your business is done, right? And so the number one most important aspect of this business is risk management, right? So what is risk capital? Capital in which you need for groceries at the end of the week, capital in which you need to pay your electricity bill, your water bill at the end of the month, or just basically have a good quality of life. That's not risk capital, right? Risk capital is capital that if you were to lose it all, it would not impact your life, right? Why? A couple of reasons. One, we are taking risk, right? Our job is to take risk. And a lot of the times you actually lose in trading, right? But if you do take the proper risk, those wins outweigh those losses, right? And so knowing that, you want to be in a place where you can afford to take losses, right? Psychologically, if you're thinking about groceries, you're thinking about kind of those bills you got to pay at the end of the month. You're not making the soundest decisions. You're not really letting the market come to you and set you up properly, right? So that's kind of how we like to start off every week. And then we have a bit of house cleaning to do. And so Bookmap is launching a new course. So feel free to go check that out in their learning center, their supply and demand setups course. You can find that over on the website. You can see the website here. So bookmap.com/en/learning center. So go check that out. Another announcement from Bookmap is they just rolled out a new verification process within their Discord, right? And so you can find the Discord right here, discord.gg/bookmap. I exist in that Discord. DARMA Capital Trading has a channel in that Discord, right? So highly recommend coming and hanging out with us. But go through the verification process, right? It's the fastest way to kind of get responses from us and kind of engage in what we're trying to build. So the last piece is we actually, and I've started out every week, is we rolled out our new site. So we are rolling out new shipments every single day at this point almost, right? So we rolled out a new blog. And so if you have any kind of ideas or questions about what we're seeing, we're trying to be fairly active when we have time off the desk writing about different markets, right? So ES on a quarterly basis, Bitcoin was on a daily basis, right? Just some setups that we're looking at and actively trading on a daily basis, right? So we talk about it each week. but we figured we'd kind of open up a blog section this week and see how it goes. So make sure to check that out and let us know. If you have any questions about what we do, this is the site to do it, right? So you can sign up over here. You can go through down in the top or bottom right, free trader assessment and education, right? We offer out some free education and a trader assessment. Trader assessment helps us understand who you are as a trader, so we can better understand and help provide support for you in that journey, right? And so some traders are completely hybrid, some are completely systematic, and some are purely just discretionary. All of that matters, and all of that matters within classifying what makes sense for you and how you interact with everything in which we look at, right? So that's the house cleaning. Let's talk about what kind of the meat and bones of what we talk about each week. So for those that are new, we kind of take a top-down approach to markets, right? So what's happening in the macro landscape, what's happening then on more of the micro, but not super micro landscape, right? So less about the daily action, more about the weekly. Macro is kind of about the quarterly, more about the monthly, more about thinking a couple weeks out in advance, right? And then we really get into the micro, which is looking at Bookmap and understanding where that resting liquidity is currently in the book and aligning it with kind of our outlook for the week, right? So we try to keep it super simple. Markets are incredibly complicated as they are. There is an inherent randomness to it. However, they do tend to trade normal in a normal fashion most of the time, right? And so let's talk about macro events. So I actually did a recording last Friday that was posted this morning. So if you did see that, we're going to kind of go over the progression of the weekend and how trade is kind of opened up on the week. And then we will we'll really take a look at kind of the next few days as we close out the month, and then we head into the new month, right? May, right? So the mid of quarter two. So macro events, to be quite honest with you, not much, right? And so if you pull up news today, of course, there's back and forth between the U.S. administration and China about the trade deals and all these kind of things, but there's nothing concrete, right? And it seems as if that might be a new norm for a period of time until there's a new shock, right? Whatever that shock may be, whether that's positive, whether that's another escalation, right? It seems as if the U.S. administration is not really pressing. Secretary Bennett this morning said that he has some, and they have some escalations in their back pocket if they need it, but that's not what they're looking to do, right? And so concrete and constructive, it seems, but it looks like time is going to take place here as kind of these trade talks unravel and kind of progress, right? And that would be normal. These are large talking points. These are big policies, and so the expectation of time and a positive outcome here and now immediately is probably quite unlikely, right? What is some here and now that we can look at tomorrow? Tomorrow being Tuesday, April 29th, after the close, around, I believe it's 8 p.m. But Trump's going to be speaking in Michigan. He's going to be speaking in a county called Macomb County. I'm actually from Michigan. So that is just north of Detroit. And he's going to be talking about his first 100 days in office, right? How has it been going? There's largely going to be probably some talk directly to the automotive industry, right? As he is in the big three territory, right? While that's the case, there may be some headlines surrounding crypto as well, some name drops in there. However, kind of what's largely going to be talked about likely is trade, right? And that's going to impact markets. It's going to be a market mover, and that is going to be a binary event as we go into the next 48 hours, right? We are priced up quite a bit from the lows. So we'll see. we'll see if markets want to extend a bit further or if they want to fall back into a digestive trade, right? And so we'll kind of go over that as we go over the outlook. But for the first time in quite some time, on the macro sense, there isn't a large thing to really speak on. So let's go into the outlook and pull up the price map. Right. And let me see if I can line this up correctly. Let's do that, and I'll pull up Bookmap right next to it. Let me see, I'll pull up Discord here as well. Awesome. Okay, so on my left, a lot of you guys are probably familiar with it at this point, but that is the price map. And then on my right, obviously very familiar, that is the Bookmap, right? And so kind of what we talked about and what I recorded on Friday was 95 is going to be a pivotal level as we approach this monthly 95,614, right? It's a previous month's high. Psychologically, it's a big level heading into end of month for a lot of rebalancing and a lot of allocation, right? It also aligns with some other broader risk, right? So the S&P 500, which there is somewhat of a correlation. However, we have seen in bits of this trade over the last quarter some decoupling from that, right? So you can discount that a bit. However, 95 remains to be the significant figure, right? We did get some new weekly data, so let's pull that up and blow that up for everybody to see. So let's talk about it. We opened up significantly higher than the directional. Every week, we like to talk about the directional first, why that's kind of our over-under in terms of our directional bias, right? There's a sentiment bias that we'll actually talk about that we talked about a little bit in the Discord today. So I'll talk on that. But for here and now, opening up this far off the directional, it's either going to scale, test that weekly CR plus, right? Or it's going to fail. Where is it going to fail? The previous week's close is a pretty good line in the sand to suggest that, hey, we're going to actually fall into somewhat of a digestive trade here off the opening of the week, get a base going, and then we held the weekly directional to the tick, right? Holding to the tick last night is positive, right? That means that directionally, we still have a positive bias. This green level being far under the market is the sentiment level, right? We see that as a positive sentiment. So a price that can hold the weekly directional and also has a positive sentiment, that's a positive market, right? What are we looking for next? Well, the fact that it held it to the tick, right? If you really want to blow this up, you can see it was off maybe by less than 100 points, right? Probably less than 25 points. That's incredibly bullish, right? At least to start the week, and that's a trade. Where does it go? Rotates to the weekly CR plus that we talk about kind of each week. That's in alignment with kind of that larger time frame that we were talking about, right? That 95. That continues to be the psychological level, continues to be a very big key level, right? And previous week's high, right? Can't really see it until I blow it up a bit, but you can see this PWH, previous week's high. Market's just testing a range, right? That's all it's doing. It's not really looking to break out. And if you take a look at the 30-day straddle, 30-day straddle is priced, vol is historically fairly cheap, right? It's around a 46 handle. And the straddle is around 10,500, right? Which is roughly around 10.5%. For Bitcoin, right, that basically prices in a move to 105 all the way down to around 80, right? So most of this range here from the UT1 down to the CRX minus, which would be a very statistical norm for range in markets on a weekly basis, is priced in, right? That's only on, or sorry, that would be on the 30-day basis. And so markets are kind of looking for a breakout. They're waiting for it. Fall market saying it's not going to happen, but we'll see. We'll see, right? Um, so what are the next few things to look at? Came up here, tested 95 and some change, rejected it off the open this morning, immediately rejected down, retraced, tried to take a stab at the previous week's close, couldn't do it, fell back in, tested this yellow dash line, which is basically the upper alert distance for the weekly directional. You can see that as the variance. This still qualifies as the figure. It's not to the tick. There's less kind of structure to lean on, meaning, look, if you bought it off here, your risk is 100 points. If you buy it off here and you risk down to 92, even if you risk down to 93, you have 500 points. It's significantly different in terms of risk reward, almost to a factor of 5, right? So it's not perfect. However, we held it. If you align it with some of the daily structure, which we'll pull up, and that's what we often do, is we take a look at multiple structures to really get an understanding. You'll see that it aligned pretty well with previous day's close, PDC, PDL, previous day's low. So it tested that daily range, and then we held that that daily directional, and that was your rotation higher into the close, right? And so that was the trade. Now we are post close, right? We talk after the cash close, and the trade's done. So let's take a look at the remainder of the week and see what we can deem from it. So let me see here, pull it up here, drag this over, blow this up. Over previous week's close is what we're gonna need to see, right? I'll post in the Discord today when we get some new daily, just so that you guys can get a bit more clarity, right? Daily provides a little bit more microstructure on a weekly basis. Previous week's close, it's a great over/under number for the continuation of this trade to hold. However, if you're just entering here, it's not the best average, right? And so you can lean on the daily to really get that microstructure. You can also lean on Bookmap to really get an understanding of that risk, right? Number one priority that we always have is risk mitigation. If the market's not performing to expectation, which means it has to base over the previous week's close, then it's a signal to lighten up at the very least, right? Doesn't mean it's bearish. It means that your entry is early. And you can look to buy lower off of this weekly directional. So 90, 92 and 3/4 is the level to hold. If it holds there, the next is 95, 650. That can hold. We come back and we test today's highs, right? Where do we go from there? We have some resting liquidity here that are in line with today's highs. So you have a band here, the 50 lot sitting in the perp book. It's not significant size, 50 lots is not a lot. However, you have 120 sitting at 96, 97, right? Which is a bit over here, which doesn't align perfectly with the price map, but it is a figure to watch on the Bookmap, right? Oh, apologies, sorry, 96, which does align perfectly with the price map. 97, where you have this 180 lot, does not perfectly align, right? So 95.5, 96, those are two levels to look for this kind of overhead to blow through. Targets that 97 in the Bookmap, but the expectation is as long as we can hold that 95.5, 96, which is this weekly CR plus, that is the validation of a weekly directional breakout, which targets the UP, right? That UP is right at 99, right? Let's kind of pull it back here. $99, there's not so much resting liquidity. There looks to be a resting offer 1,000 points all the way up the book, right? So 96, 97, 98. 99 is a little bit lighter, but if this player continues to offer out, would imagine that lights up as well, right? So 99 would be our expectation if 95, 96 holds, right? And if this market really wants to extend, which it can, because 95 is a very key level for the extension, the fall market is not pricing in a breakout, right? So they would be caught off sides. Then a hold trade of 99 targets 105. That can happen quickly, and it probably happens on the back of a positive catalyst, right? Fall market pricing in a 10,500 Straddle basically just says they're not really excited about the expansion of range this month, right, on a 30-day rolling basis. Great. And they can be wrong. So 105 is the upside target. If 99 holds, where do you get a lean on it? Starts here now. In the overnight, we have to hold 94,650. If we can't hold 94,650, then we got to start thinking about downside scenarios, right? Downside scenarios, still positive if we can't hold 94,650. Doesn't become negative until we breach this 92,750 area, 793.5. And if we break that, where are we going to go? Again, brown to brown. That is what we see as a weekly CR rotation. That would be a symmetrical move down, right? If we base here, which is your previous week's mid, we could rebound and just continue to be a sloppy, tight trade for the week, or, which would be a positive digestive scenario, or we really make a play. Where do we make a play? 88 is that lower level. This is where we expect all the buyers to step in, right, at 85. If buyers can hold 85, that is a structural problem in the market, and that needs to be accounted for, right? That means downsize risk, downsize all expectation, right? As we approach the week, where's the best place to deploy risk capital? This green level, right? We talked about it in Discord today. The R level on all time frames is the best place to deploy risk capital. That is where the highest risk reward is in your favor, right? Where can we see that? Let's take a look. This is the daily. Kind of blow that up for you. But it shows you how price kind of moves through the price map, right? And so the breakdown to the weekly directional, and we can see how these kind of all line up and how we use all different time frames to really get a picture of the markets, right? Daily has a lot of noise, right? However, is incredibly powerful for trading intraday, right? And thinking about here and now trades, right? So weekly directional held to the tick, right? But we broke down to the daily CR minus. This is where the best area, that green level, to deploy risk capital. Blow that up so that we can see. Right? So the closer we get to it, the better your risk reward is to get long, right? Under the directional means that you need to be cautious on buying aggressively. However, if we do get down to the green R level, that means that is the best risk reward. We didn't get there, we held the weekly, right? Price right back through here, that's the signal to get back long, right? Where does it go? Rotates here, right? Brown to brown, that's kind of what we're looking at on the weekly time frame. If that were to happen to the negative side, that's kind of what I'm showing. The smaller time frame, brown potentially to brown, if we can't hold this level. Where do we go from there? Came up here and tested this red level, right? Market couldn't break out, failed here. That's your signal. A failure here targets the weekly directional, or sorry, the directional. This is the daily. Got a bit sloppy, but we continue to hold the weekly. The moment we price back through here on the daily, that's your signal again. Get along. Where are we going to go? It aligns with previous week's close. That's a good close on the session. And if we can hold it, you can get that rotation higher, right? So let's take a look at Bookmap as well and see where we got some resting bids. And we'll pull back up the weekly just so that we can get some longer duration. 92, you have some resting bids down here. 93, so some resting bids, 93, 92. Again, they're stacked about 1,000 wide all the way down once again, right? So you can see 93, 92, 91, 90, all the way down, right? So those are key areas to look on the downside. If we get an opportunity to buy it off the 85, that's the best area to put some capital to risk this week. And where would you risk down to? Just that once it goes into the black, right? If it goes into the black, that's a reason to be concerned that the structure is not holding to expectations. Just means lighten up, wait for next week, or wait for a better price to re-enter. Let's pull up Ethereum. Take a look at Ethereum. Let's pull up the weekly here. So Ethereum continues to be tight range, right? Bitcoin's been stronger. It's been consistently stronger for years now, right? If you pull up the spread. But nonetheless, Ethereum trades, and it trades in a large range as well. So you can see that the green level is actually at the directional this week. What does that mean? The market's ready, right? Last week, it's been a lot of time kind of building this base right here. A lot of the trades happened right through here, right? It's ready, it's coiled, it's ready to make a move. It absolutely, markets in balance can remain in balance. Absolutely, right? So trading this, we call this to be an R5, which just means the green level's at the directional, means that we have to be very open to the idea that trade can just be really choppy through this range this week, right? However, a trade that bases and wants to make a play outside of these brown levels is a trade that you don't want to step in front of. Why? Because it's already spent all the time coiling up, right? And this green level just at the directional tells you that, right? And so oftentimes volatility shocks, large moves happen, and then there's a digestive period, right? If you look at any volatility cluster, any kind of trading, volatility tends to beget more volatility, right? And then there's a period of compression, markets find an equilibrium, and then they expand once again, right? So all of this is telling us is the market is in somewhat of an equilibrium and it's ready. Doesn't mean it has to go this week, but if it does, it doesn't mean, or it means that it can be a very powerful move, right? So let's take a look. Over 1779, that's positive, right? Where can it go? It's got a base over this previous week's close. Same kind of ideology as Bitcoin. If we can get over the previous week's close, which is about 1830, that's positive. We really need to rotate through both of these, previous week's close, previous week's high, and take a stab at 1883. If we can base over 1883, that opens the door, right? If we cannot, again, we have to be ready for a digestive trade as a market imbalance can stay in balance, right? However, over 1883, that's a green light to start to look higher and start to look higher fast, right? Because a coiled market can expand quite quickly. Because there's a lot of complacency amongst traders that are just trading this tight range, right? They think it's easy. You just buy this low and then you just sell this high. Well, the fact of the matter is that does work until it doesn't. And once it doesn't, you're either caught short or you're caught underexposed. And then it creates a chase. It also creates forced buying, etc. Right? Get rid of that. Yeah. So over 1883, where do we go? Immediately we target around 2000, right? That's the level. And then if we can hold 2000, upside target here is around 2200. More specifically, right within a 2140 to 2171 range, right? That would be a normal. And when I say normal, we've run this back through years. 83% of trade falls within the UT1 down to the DT1, right? So when I say normal, that's what I mean by normal, a stalling point. Now, as in markets, normal is backward looking. Anything forward looking can happen, right? And so if this market really wants to extend, again, because we've spent some time coiling, don't fight it. 2171 is the level, 2172 really. If we can base over that, get out of the way. This thing has been beaten down for months now, right? If it wants to rally, let it rally, right? And jump on the train. Let's talk about bearish scenarios, right? Under 1779 is not positive. Why? It's your directional, but it's also in alignment with your R level, right? The R level sentiment basically tells you there's no bias here. So you have to lean on the directional, right? Directional tells you a price bias, and the R level tells you a sentiment bias, right? So if we're under the directional and there's no sentiment bias, by default, it's a negative bias, right? If we hold these lows, obviously that's positive, right? So if we trade down there, we can't break through it. It's a reason to get long again. Why? Don't want to be late in markets. You always want to be anticipating, right? So always leaning in, leaning out of ideas, never just chasing, right? If we break these lows, then where are we going to go? 1700, 1697, 81 is the figure. And then if we really break down, where are we going to go? The DP 1616, right? And again, once again, because this market's been coiling for some time, don't step in front of it if it wants to break down, right? It's been beaten down very aggressively this year. However, it can go down further, right? So under 1616, target's 1431 for that downside normal target. And that's the outlook for the week. So Bookmap, if we take a look where some resting liquidity is, the book is fairly light on the bid and on the offer, right? So you got roughly around 1660 area, right around that previous week's mid. You have some resting liquidity, right? You have, if you add up all these 1,000 lots, you have resting liquidity down here. However, it's not significant enough to really stand out in the book, right? So that is that's the outlook for the week. Let me pull up. I don't think. Yeah, I'll unfortunately I couldn't get a recording up to or sorry, a live stream to YouTube, but I'll get a recording up. I'm recording the session currently, so that way anybody that's watching on YouTube, you'll have it as well. But I wanted to go through some of the questions that we talked about in Discord today because they were really good. So Julian asked, to better understand the directional level, what exactly is it composed of? Is it based on the settlement, the opening phase, or something else? So directional is what we see to basically be that over under, right? That price sentiment, or sorry, that price bias on the week, right? So we talked about it a lot this session. There's a price bias and then there's a sentiment bias. They coexist to give better context on the market structure, right? It's not just a pivot, right? You can see it as a pivot. However, when you combine all the different ideas in terms of sentiment bias, in terms of we're also looking at some other different structure points, previous week's high, previous week's close, previous week's mids. All these things paint a picture, right? Algorithms interact at different levels. Funds, money managers, right? All have mandates. They all have to interact. Fundamentally have to do things at specific levels, right? So we see it as kind of that over-under line in the sand on the week as your price bias. When it coincides with your sentiment bias, you got to lean on the price bias, the directional more. But when it's different, right, which is such as Bitcoin, it gives you a bit more context, right? So when we hold here, it's a positive price bias. However, because let's say Bitcoin fails the previous week's close, trades under it, doesn't mean Bitcoin is negative. It just means Bitcoin is on a price bias in a more digestive area, right? That can trade all the way down to 85, a digestive lower range, right? But the expectation is if we get to this level, that it would hold. It's so positive outlook, right? You're just looking for a better area to buy, right? That is not always the case, right? If we were to pull up the monthly Ethereum, you'll note that the sentiment bias is actually over the market. That's negative, right? That's the expectation that rallies are going to fail, right? And we're almost through the end of the month. Look at these rallies. Tried to price through at the beginning of the month on the monthly directional, immediately failed, right? Where did we go? Down to that lower critical range area that we often talk about, which is at DP, and then we bounced, right? But it's been hard going. It's had a hard time the whole month, right? Let's pull up Bitcoin. You'll see Bitcoin on the monthly, totally different story, right? We started off in an R level at the directional, right? That means the market spent some time decompressing. It spent some time compressing, or sorry, not decompressing, spent some time compressing, creating a tighter range, digesting this new area of trade, right? We failed. Don't fight it. We held down here and rotated back through, right? Rallies extended, and a majority of the trade held these levels, right? These were key levels that we talked about at the early part of the month, and then we'll see that once we held them again, that was the extension higher, right? So it's two different markets. While Bitcoin and Ethereum are correlated, you have to treat them independently. But I thought that was a great question. Next question are CRX plus and minus. Are they important levels? Absolutely, they're important levels. Why? Statistically, 83% of trade holds the UT1 down to the DT1, right? That's very important. So that means as you approach the UT1, actually risk reward is against you to lean long. And as you approach the DT1, risk reward is against you to lean short statistically, right? And so that creates context on when to mitigate some of your risk, lighten up. It also, I mean, that's what we've been talking about all week is 95, right? And that's held almost to the tick, a bit over it, a bit under it, and we continue to struggle to get through it, right? So that, in terms of the critical range extremes, which is CRX minus, CRX plus, absolutely those are important, important figures. And then the last one was how is it that the market metrics are so accurate with identifying trade entries? So for those that haven't taken a look at what we look at or kind of follow along on the stream, make sure to get in the Discord, ask us questions. If not, we offer free trials. Pull it up on a chart, take a look at it, and see for yourself. So these are all in combination with Bookmap. We see them to be incredibly powerful, and we are continuing to build on them. So thought those were good questions to kind of end up the session today, and enjoy the week. So thanks for stopping by.